Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 7th, 2021. It is 11 o'clock a.m. Eastern Time as I'm starting the video. We're going to look at commodities in this one. I just starting out here with the Qs, QQQ. Just wanted to update the fact that this was pointed out as the next and pretty much last resistance, this gap right here. The gap, what date was that? The gap on February 22nd. And so far, that has capped the rally. Now, the breakout's still intact. Keep that in mind. There's a breakout. That was a big 324.65 level trading range breakout candle. But so far, day one, the day of the breakout, that's what we hit. Day two, look how flat that doji was yesterday. And we're there now. So, still one of the better looking areas in the market, the big cap tech names, most of those breaking out, and those that haven't are close to levels that if they can pop a little more upside, then we could go. There is a lot I want to talk on the market. I want to talk on some of my sentiment indicators, where they're at. There's really no change there. In fact, if anything else, we just hit another extreme on the bull-bear spread, some other things. But I'm going to loop back to this later. I just want to do a quick update saying that's where we're at. No change as of now. The breakout's still intact. And as I said the other day, unless that fails, that breakout is bullish. I'm referring to the break above 324.65. So if we can push a little more upside, then NASDAQ 100 will probably make a run at those previous highs and most likely take it out and put in a new high. Any marginal new high, like I've been saying for months before we even got to it, and we haven't gotten it yet, but should we get it, it will be a divergent high. The divergences in place that I just drew out here on the indicators will still be very much intact. That doesn't guarantee that it will only be a marginal new high before a correction, but it very well could be. And again, if the divergences weren't there, then it might be a breakout that had much more potential to run. All right, let's get to the commodities. Let's roll into that, and I will follow up on a more comprehensive update on the markets soon. Start out here in no particular order. I'm just going to click on my watch list in the order. I have starting out with the ETNs and ETFs that track commodities. That one I'm going to skip over the JJS. Here, let's go to UNG. This is natural gas ETN, one of the more popular liquid ETNs for trading natural gas, UNG. And most recently, we did put in a divergent low here. Now, I highlighted nat gas futures as a breakout the other day right here. And this is UNG, the ETN. We'll get to the futures in a second. And it ran up to that 987 resistance level, got checked, pulled back. But what it did there is it put in a divergent low here, potential divergence if this can turn back up, this PPO, and set the stage for a possible rally. So let's look at the futures real quick. And that would be NQ, or you can do QG. That QG is a smaller contract and trades off the same levels as NG. Let's see if I can find my NG here for you. Somewhere down here. I will have to pause the video. I have so many charts going down here. I've got to find it in my taskbar. Hold on one second. Okay, here it is. Nat gas. Actually needed to add this line here. That's our new divergent line. That's comparable to what I just showed you on UNG. So the story of nat gas NG futures, we had a divergent low right here, which sparked a rally. Then a buy signal and a breakout of the downtrend line and or the back test. And we went up and hit that 2675 target right there. End of the run. As suggested, a stop below that uptrend line would have been taken out right there, and we had another leg down, and then of course we also went down below the 526 level, to 526 that is. And but look, we put in a small divergent low right here. In fact, it's an even larger, an extension of the divergence as it started all the way back here. So there it is. You have where you had just divergence on the PPO the other day when I pointed out that setup. We did not at the time have it on the RSI. Now we do. We have roughly equal lows on the RSI up to that point, and then this most recent low there put in divergent high. So we could run here, and this is the same story as any setup. There's a divergent low. We reversed off it. Take a shot with a relatively tight stop, and it's just below this reaction low, and there's also a gap back there. So I do think nat gas warrants maybe another long entry here based on everything I'm just talking about. The divergent low, the fact we pretty much tested that previous reaction low, so far it held support. And the targets would be the same as I laid out on that previous trade. Now again, they were already hit up to that 2675 level, but that should also come in. Let's just say that would be a minimum swing target right now, or you could even, if you want to just tight, 2616 level. But the fact that 2675 was already hit, I think if we get there soon, this divergence would certainly be confirmed. Then a breakout above that could take us up to these next potential targets, 2741 and then 2929. Again, actual resistance levels, unadjusted price targets is what I refer to those as. Okay, next up is coffee. You can trade that via the ETNJO. Or you can use coffee futures. JO, of course, is tracking coffee futures. And coffee's been in what I believe to be a big old basing pattern now for the last couple of years. And there's been plenty of nice swing trading opportunities along the way. Pretty much swinging it up to the top of this range there, about 40.70, and buying it down at support around 30.60, including this one right here where we took a shot. And that one panned out. We had an undercut and then recovered the level there. Entry was right here when we regained 30.60, swung it up to there. And so what we're looking at here is a pullback to support. So this line, which was that former target level there on several occasions, we've been trading off that level here. Let me put the line up, and the level's up about 35.43 or so. We recently pulled back. So we did have some divergence there, and that caused this correction. And yeah, the MO has been a swing down back to the bottom of the range, but again, I've made a case repeatedly recently, and that case has been, I believe, much stronger now than it was before, that commodities have most likely bottomed and are embarking on a new bull market, new bull run. So with that being said, going off that theory, I doubt we're going to see another run down to the bottom of the range. I think that was probably your last opportunity right there with that last divergent low. And all I can say is support until unless broken. So we came in and tested that level, slight undercut, which is actually bullish. I pointed that out on the futures the other day that we undercut it, but we'd have to get back above, and I'll show you that level. And we did. So an undercut, what that is, it gives you a little bear trap, whipsaw signal. It's maybe suck some shorts in that think coffee is going to make another run down there again. And what happened is the opposite happened. The buyer stepped in, saved that breakdown. And again, this is JO, that's the coffee futures. As far as targets, I'd be looking for another run at least up to that 40.70 level, and if not, quite a bit more. So this could be a re-entry time for a long-term trend trader positioning, for a bull market in coffee. And then the futures KC, let me find you those. Here it is, KC. Let's do a refresh on this, make sure it's up to date. Okay, so here's what we have on KC. We had a little trend line here that was taken out but has since been recovered. And we also have a support zone there, about 120.71 to 122, if you will, somewhere around there. And that's it. We pulled back. So here's your support zone. You can see these previous reactions over here. It's back here, back here, back here. And boom, we hit it and we bounced. And we did it with positive divergence in place. Here's your bullish divergence down there on the indicators when that was hit. So again, the case can be made that coffee may be about to start the next leg up, and that's what it looks like on futures. So that's another one I'm liking right now. Cow, let's go to the ETN Cow. Cow is a combination of both lean hogs and live cattle. So you have both in there. And the thing is, sometimes one is going up, the other's going down. They roughly move in tandem, but not always. And I'll get to the futures in a second on both. But there it is. Cow's walking up this uptrend line. Here's right here. It's that simple. That's what we have to watch. There's potential divergence right there, but it's in a bull trend. And sometimes in a bull trend, as most commodities are, divergences can get burned through, or the negative divergences in a bull trend result in a correction, but a relatively minor correction. So we'll watch that. I just want to point that out. Took out this long-term downtrend line. Let's go to those futures because I do want to do an update here. We had lean hogs. right here, HE. Pop this. We keep putting in this divergent high. The divergences continue to build and build, but we had this move up today right here, and that extends the divergence right there. And we've had this trend line here, recently broken, but back tests again. There's been a lot of whipsaws, and this also speaks to the resiliency of this trend in commodities. I've been harping on them for last, over a year now, as having the best, a lot of value, risk reward ratio, minimal downside, fundamental case could be made, a technical case, everything else. And I think we're really starting to see that now as stock prices continue to get very frothy. I think a lot of investors are moving to what I call the inflation trade. I mean, that's the other drum I've been beating. Is it's crazy that Powell can't see it. Lumber prices, copper prices, everything, all commodities, you name it, gas, oil. I don't think there's a commodity out there that hasn't had very strong returns in the past year or so. And so that, coupled with the gains in the housing market, and remember, this translates directly to food. This is what's going to raise prices in the grocery store, from everything to the meats you buy to cereals, grains, and all that stuff. And yet, Powell's trying to say inflation's not a risk. It's asinine. I mean, you can see it in these prices, and the trends are resilient. And that's the point I'm trying to make here, is we've had these couple breakdowns, but so far they're whipsaws. This thing just keeps going and going and going. So there's HE. The other one was LE, which is HE is lean hogs, LE is live cattle. Let me pull that chart for you and do an update there. There we go. That one has it hit this 117,995. We'll call that 118 support recently. Pretty decent support. Quite a few reactions lately. Bounced and had a little minor uptrend line there. It was broken and being back tested. I don't have a strong opinion on this right now, so let's just move on. Oh, I did want to loop back. I was about to show you lumber futures, and I went to pull this chart, and I already had coffee up on this charting program here. This is a longer term view. I just showed you coffee a minute ago on the 60-minute charts of KC coffee futures, as well as the daily chart of JO. But this is longer term chart of coffee futures, my weekly chart. So it shows the bigger picture, looking for these divergent highs followed by corrections, and divergent lows, which are bullish, divergent high, wash, rinse, repeat. So most recently, and again, this goes back all the way to 2019. I highlighted this big divergent low right here and laid out two high probability targets and a third that's buried under this annotation there. There's a level right there about 230 in coffee. And those were and still are my targets. From that divergent low, there was our breakout right there, and we went on to hit my first target. I was calling for a 60% rally, and we got it right there. That was hit almost to the button, pulled back, and since then it's put in a higher lows. See, that's the definition of an uptrend there, right there. We just need to take out that previous reaction high now. We tested it once again on coffee futures right there. It's about 140. So there it is. This is our uptrend right now. And so if we pop that, that should bring us up to my next target there at 170. And again, that would be a 90% gain from that divergent low back in 2019. So patience pays, and I think we'll get there. And then potentially up there if and when that goes to my next target, about 230. So that's the longer term outlook for coffee. And while I'm here, we'll look at lumber futures, and we can look at a daily chart. Let's do that. Okay, this is lumber. Lumber has increased almost 300%. This is through yesterday's close, and it's up another couple percent today, 2% plus. That's about 285% through yesterday. That's from the lows back there in 2000, March of 2000. And I also measured, just to get an idea, from the peak back in 2018, the prior peak, all-time high, it's still up 63%. So again, this is a nearly 300% increase in lumber prices since March of last year. I did a little digging on this. It's going to put the brakes, I believe, very hard on the housing market. And I'm already seeing that in some of the articles I read. I think it was, oh man, I should have wrote down the numbers, but the increase on an average home is something north of 20, maybe almost $30,000 in lumber. You have these framing kits the builders buy, and that's already made the cost just in over the last year. And again, I'll have to look at it. There were different areas where they calculate it from here to here, here. Maybe it's a $30,000 increase from here to here, which is huge. And what it means is, number one, it's causing not hyperinflation, but certainly inflation in housing prices. We already have a shortage of homes on the market, but then the builders too are really getting boxed in here because they've taken a lot of contracts to build homes, and now they're going to have to eat that cost. So I'm going to watch that home builder sector closely, and I'm going to watch this lumber sector. And this is the primary uptrend line right here. We already had a parabolic trend line break. Primary trend line, the divergence continues to build, and the last time, you can see with these corrections, lumber does this. It's always done this. It has these strong runs, usually ending in a parabolic run like we have here recently, and followed by a very strong and powerful drop. It's just how the market works. And so this one is on my radar. No sell signals yet. In fact, let's go zoom down to the 60-minute chart right here. This is what we need to see happen for lumber. We need to see, let me color up this tool right. This short-term trend line needs to break right there. And if and when it does, this is a potential target, this longer-term uptrend line, as well as that 921.51 level, followed by 779 or so. We'll call that 780, and that would be a heck of a drop if and when we get that sell signal. From where we're at today, it'd be about a 27% drop down to 780 or so. And again, just going back to that, that's only going to bring us back to right here, right about this point right there. And based on these past corrections after big rises in lumber, I think we could drop even a lot more than that. JJG is one I laid out a while back. Most recently here we had this bullish falling wedge pattern, breakout back test, and what it does, JJG tracks the price of corn, soybeans, and wheat. So I threw this out there as a sort of a one size fits all for those that are bullish on the in the grains. Then you don't have to buy 3 different ETFs or 3 different futures contracts. You can buy one, and it gives you that diversity versus just picking one of those commodities. Corn and wheat usually tend to move together. Soybeans somewhat. Soybeans will march a little bit more to their own drumbeat. But again, just a strong chart. This is bull market action. This is not a bear market rally. Bear market rally would fall shy of the previous rallies. So this is early stage bull market action. It's been consolidating here above that 57.38 level for a few months. Put in a divergent high, but so far that correction is more so in time than in price. I often talk about that. Stocks or securities can correct in one of two ways. They can correct in price, or they can correct in time. This is the bullish of the two, more bullish of the two, obviously. And that's what happened. Put in a divergent high. We're very, very overbought, the most overbought this ETN has ever been. And so far, that's what it's been. It's just a correction in time, bullish price action. Looking at these indicators, we could go up, have another thrust up, and then put in a bigger divergent high and maybe correct. At some point, you get these big profit taking step in, or fundamentals will eventually say, hey, prices gotten ahead of themselves, we need to correct. But either, as of now, like I said, looks okay. Do you add here? It's again a long-term trade idea that's been thrown out there. When prices are up this high, if you don't have any money in ag commodities, then yeah, I think you can certainly take a position, maybe scale in. If you get a correction, the max downside target I think would be 50.56. It'd be a pretty good drop, but if it got there, I would be very interested in adding to or highlighting this as an objective long entry. Otherwise, we may never see that. We may get a breakout and a run up to the next leg higher. All right, JJG, and again, that is comprised of several I'll get to those in a second. I'm just going down the watch list in the order I have it here. Another one that I threw out there is even more of a one-size-fits-all. In fact, this is the ETF for agricultural commodities. So I just showed you JJG, which are the grains, corn, wheat, and soybeans, but this one has them all. You have live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, lean hogs, feeder cattle, and cotton. So again, a one size fits all. I've been harping on it back here. We had this trading range, which I referred to as a basing pattern. You had a breakout right there, and that was it. And never looked back after breaking out of that basing pattern last year. And it's been a nice run since. Off the lows. This ETN, which again has a lot less risk than equities, because commodities, corn never files for Chapter 11 bankruptcy protection. There's no corporate fraud or anything. These are commodities. They're going to be around, and when you have the easiest Fed in the history, in history, that bodes well for commodities and things like this, which are, it's the inflation trade. So it's been about, nothing stellar, but about a 34% rally off that low. And again, something when you just strip away all the lines, you look at it, it's just clearly in an uptrend. And worth mentioning is you had a trend line break right here, followed by a correction. Hard to say if it's over. Again, my convictions on this one now, it's kind of in no man's land. It's had a heck of a run. It's taken out quite a few downtrend lines. Again, early stage bull market action, because it's taken out all these previous levels, which were big resistance back then. And so again, if you don't have a position, maybe just scale in. Wouldn't add heavily right here. But it's something I still think over time, in the coming years, I think there's more upside in these ag commodities. And here's corn. There's been a lot of trades, long and short, throughout over the last few years. And corn, most recently, bigger picture, put in this big divergent low back here. Positive divergence had been building for a while. Took out the downtrend line and has been in a uptrend. Again, indicative of early bull market action. There is divergence, and that's worth mentioning, and it's kind of stalled out recently. It's been we had a big move up in some of these grains the other day, this big candle here, but kind of stalled out since then. Near term, my convictions aren't real high. Here's what it looks like on the futures. This is a 2-hour chart, 120-minute candles. And then there's that divergent high. So we first put a divergent high here and then corrected in time. Again, a sideways correction. And just eked out a marginal new high the other day on that big ramp up, but we're back below it. And the divergence continues to build. So this one could have a little more correcting to do. It's in a trading range now, so take it for what it's worth. I think better opportunities at this point in time. Maybe just wait for a more objective entry or re-entry into this one if you're out of it now. And if you're a long-term investor, hold, and it's just a way to diversify your portfolio. Don't have all your eggs in one basket. They should never be 100% equities, 100% bonds, 100% Bitcoin. It should never be 100% commodities. Sprinkle it around, and then I like to use what I call tactical asset allocation. Whether that sliver of the pie is equities or stocks, and that may be higher or lower depending on how market conditions are. Commodities, gold and precious metals, things like that. That's how a portfolio should look. And then how big the piece of the pie looks depends on how well the sector looks. And some of that can also be long or short equities, or a combination of both. Okay, sugar. Here's one I clearly like, laid out the other day as one of my favorite setups at this point in time. Actionable trade idea off the 46.70 support. Nothing big, but it continues to move up. And really, the case I made and what I'm trading are sugar futures. That's SB. Again, this is the ETN that tracks it. This is SB, and so far so good. Playing out as it was hoping it would, as expected. There's our support zone right there. highlighted the other day, highlighted as an objective long entry at support with an additional buy signal or objective long entry on a breakout of the downtrend line slash bullish falling wedge pattern, which we had, and so far so good. So we're about 2/3 of the way up to my first target there, 0.1556 or so, and those are your additional targets. So sugar looking good right now. And never lose track of the bigger picture. This is sugar futures on a weekly chart. So every candle here is 1 week. This goes back to the early 2000s. And what I want to show you is, just don't ever underestimate a bull trend. How high prices can go, how quick they can go up. And sugar is a volatile, commodity, just like lumber and natural gas. It has these sharp runs followed by sharp corrections. The technicals will usually be your guide. What do you want? What I mean by that? Well, you don't want to be buying when you're extremely overbought. In a bull trend, you want to buy when you're oversold. Even better if you can get positive divergence at those lows. Sometimes it's a one and done oversold reading. Oversold. And so most recently, just to kind of fast forward, we put in on the weekly time frame, and that's why I've been making the bullish case for sugar for a while. Big positive divergence back here. The last time we had this early, the first part of this divergence was followed by a 56% rally right there, and that was a breakout of this bullish falling wedge with positive divergence. From that point, we extended the divergence. We put in a marginal new low. Prices crashed during the COVID shutdowns last year, and what that did is it just put an even larger divergent low, and since then it hasn't looked back. So I think we're in the early stage bull market action, a lot of these commodities. So this run right here, I haven't measured it, but it's probably, I don't know, just eyeballing, maybe 80%. I think probably has a lot more to go over time. Okay, so I showed you DBA for the one size fits all, shotgun approach to agricultural commodities. But if you want to keep it even more simple, be even more diversified, then this is one of several commodity ETNs or ETF. Yeah, this is an ETN that will give you complete exposure. So you have, this is the iPath Dow Jones USB Commodity Index Total Return ETN. That's a mouthful. DJP is your ticker, and that's it. So you're going to have everything in there, and there's just a beautiful price channel, and this one is at support. Obviously bearish, you want to stop somewhat below there, but this is what it looks like, and we are in an uptrend, and we're pulled back to the bottom of the channel. This is TA 101 or trading 101. You buy support and you either sell resistance, or you can short it and ride back down to the bottom of the channel. So if the MO continues, then you would expect a rally up to the top of the channel from here. Soybeans, I've recently taken a short on. I think, I'm still longer term bullish on these, and it may just prove to be like these others where it just corrects in time and then we get another leg up. But yeah, I think if we can take out this trend line, we're going to have a healthy correction. Soybeans have had one heck of a run. They put in a divergent low back in May of last year. Since then, and this is the ETN, rallied about 65%. So break of that trend line, you can see pretty big divergences have been building here on soybeans, and it's the futures. ZS, that's the one I've been tracking as well. ZS, yep. There it is. So this is a 120-minute candle chart, so 2-hour bars, and there was your divergent high, an extension of the divergence. We had this ramp, some quirky run up in a lot of these ag commodities the other day, but most of that's been faded so far, and still soybeans needs to take out that 1384 level. We had a little whipsaw down through there. If it takes it out, I've already laid these out as targets, so let's just say a minimum target about 1300 there on soybeans. So that's more of a, what I call a tactical trade, in a strategically, long-term bullish on these ag commodities, but you're going to get these pullbacks along the way, even in a bull market, and you can trade those or recycle back in. Maybe we get there and there's some positive divergence on the indicators at the time, and that might provide an objective long entry. Okay, let me rifle through the rest of these pretty quickly. Here's another commodity ETF, GCC, Wisdom Tree Continuous Commodity Index Fund. you've got it all, the softs, the grains, precious metals, energy, livestock, industrial metals, nat gas. And so I had this trend line before, but it's been violated twice. So this is our primary trend line right now. And so you have the same story. You have a broad-based commodity ETF at support, and you can set a stop below that recent reaction low. That would give you a little room down below the trend line in case we get a whipsaw. And again, looks objective. Here's a trend indicator I like to use, that 9 EMA, the white line on the PPO. When it is above the zero line, like it was here, the trend is bullish. And when it crosses below, again, the white line, the trend is bearish. Pretty simple stuff, but highly effective. There's the zero line, the dotted line, and once you cross above it and you start a bull trend, often pullbacks to the zero line will act as support, and that's where we're at right now. So there's two reasons, two objective cases to go long with stops somewhat below. If you cross down below it, maybe at least for the time being, the bull run is over and we're going to enter correction mode. And same thing if we take out the trend line, and there'd be a target back there at about 1885 if that happens, and that might be would be an objective area to go recycle back into any long positions that you stop out of. Moo is another one mentioned as it's the agribusiness ETF. So instead of owning commodities, this one invests in companies that will benefit from a boom in commodities, such as John Deere, ADM, Archer Daniels Midland, companies like that have a play in the agriculture arena. Tyson Food, they do all the chicken and stuff. So there it is. And so same story. It's a trend line support. A little concerned here because we have some pretty clear divergences. And remember, these are stocks. These are equities. So if we get a correction in the stock market, and there's still, like I said, I'm going to do a follow-up on the markets. There's still a lot of my sentiment indicators that are at extreme levels, and we have not seen, we did get a decent correction in the NASDAQ, but not in the broad market. And so I'm going to get to that in a second. And if so, then this one I think would drop more so than the individual commodities, and that's Moo. As of now, it's in an uptrend. It's at support. Support is support until unless broken, but if you're in it, then consider a stop not too far below, because we're dancing right on that trend line support right now. And again, with these divergences, that tells me that if we break it, it could be a pretty decent correction, maybe more than just a quick 3-5% pullback. It might be here, I'll give you a target right there. That would be a drop of about 10+%. All right, let's see. Any more? Wheat. Yep, I got a couple more. Here's wheat. WEAT, divergent high recently. Need to extend that. We had a divergent high and a correction there. Pulled back to support. This was a former price target around 574, wherever that level is. 575 is the actual resistance level. Hit that, and maybe that's enough for the correction. Hard to say. Let me look at the futures for you real quick. Yeah, we could get a bounce. Here's some divergence have been forming here, positive divergence. We had that reversal there, and downtrend line. If we can pop that downtrend line right there, and the 628-ish resistance level, that's a pretty big level, then we can run. So those are the levels. We need to take that out right there. Let's just say 628, keep it simple, and that could spark a rally in wheat right there for you. Okay, there's GSG, one of the commodity index funds. That one's already broken support. It has a lot of oil in this one, I believe, and that's why that breakdown in oil, listed oil as a short recently, crude oil, and that's what's taken that one down below trend. There's the crude ETN also below trend. Obviously, this one mirrors that. That's why GSG, like I just said, is heavy in crude, and that's why these charts look very similar. There's a breakdown, crude below trend. UGA still looking for a move down to 27.20. We had a break of the primary trend line, just like crude broke down. It's been consolidating. I had that 32.61 as support and then resistance. Once support's broken, it becomes resistance, and it has capped all kickbacks on UGA. Again, that's the gasoline ETF. And so I think if we take out the recent lows, that'll open a move down to 27.20. JJC is, I think that's a copper. Here's copper, CPER. Again, it just shows you what's going on with these commodity prices. This is copper. big component into home building and all that, with all the pipes and everything. 100% return since last year, and still very much in an uptrend right there. BAL is cotton, just broke down that below that trend line there. NIB is cocoa, pull back to support. Maybe that's it. This is a pretty decent support level. We had a little whipsaw there, but we're back above it right now. And then that's it. Let me wrap it up here. So I got all these commodities out to you, including some I like better than others. Like I said, sugar looks good now, coffee's looking good, and then some that are setting up for maybe potential pullback trades. All right, so let me get this video out to you guys, and the next thing I want to do an update on is treasury bonds and the stock market. This has been Randy Finney with Right Side of the Chart. Hope you enjoy.